As competition in the payments ecosystem is riling up between traditional and challenger banks, reshaping core systems and technologies of traditional banking is long overdue. When talking about future-proofing banks and financial services, the term banking as a service is starting to come up a whole lot. But what is banking as a service all about, and how is it reshaping the industry? Good morning, everyone. This is Mark for Payment Genes, and today it's all about payments. So let's kick things off easy. Banking as a service is the provision of complete banking processes such as loans or deposit accounts, providing them as a service using banks' existing license and secure infrastructure with a modern API platform from a specialized vendor. These providers partner with these banks, and then banking as a service allows almost any brand to embed financial services into its customer experience, like building blocks. In terms of connectivity, banking as a service solutions can easily integrate with third-party solutions via APIs to either add additional services, for example, mobile banking or payments, or increase functionality of existing offerings. Examples of brands using banking as a service include Uber Money, Apple Card, and many others. Even the likes of Monzo, Chime, and Revolut use banking as a service as a way to provide better, faster, and cheaper financial products simply because they don't have to build an entire infrastructure underneath it. So, it really is a game changer. The global banking as a service market size was valued at $2.41 billion in 2020 and is projected to reach $11.34 billion by 2030, growing at a compounding annual growth rate of 17.1% from 2021 to 2030. Because banking as a service is an end-to-end process which enables executing all financial services through an API or cloud platform, pretty much any business can become a banking provider with nothing but a few lines of code. That's why banking as a service is also often referred to as white label banking. There is a large variety of active players in the market for white label banking and BaaS services. Some of the biggest banking as a service providers are Marqeta, Mambu, and Solaris Bank. So, is banking as a service the same as open banking? Well, not really. The two models often get confused, as open banking also involves banks connected to non-banks via APIs. However, the models serve entirely different purposes. In BaaS models, non-bank businesses integrate complete banking services into their own products. In open banking models, on the other hand, non-bank businesses merely use the bank's data for their products. Finally, we believe that banking as a service is key in future-proofing legacy banks and replacing obsolete systems that some of the traditional banks are still relying on to this very day, especially when specializing in one market rather than trying to cater to every other segment. From your perspective, we're curious what you think are the biggest drivers behind the success of banking as a service. Let us know down in the comments below. For now, I'd like to thank you all again for watching. I'm looking forward to see you all again next week. Cheers, bye-bye!